This is the Wealth Roundup with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. Any postings and or social media content are the views of the advisor and do not necessarily reflect BMO's position or viewpoint. The information herein is for Canadian residents only and does not constitute any financial, legal, tax, investment, or other advice. The Wealth Roundup for the week of February 6th, 2026. I'm Terry Evans with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. Welcome to February.
Yeah, Valentine's Day right around the corner, Family Day weekend coming up. Weather-wise, you never know what you're going to get in February, but I've been telling everybody, I'm enjoying the increased number of hours of sunlight. So maybe I don't have to consume quite as much vitamin D.
Well, just before we got into February over the weekend, we had January 30th. What the heck happened with the markets on January 30th?
Yeah, so kind of feels like it was kind of right in between our podcasts, right? We're attributing it to President Trump's appointee for to replace Chairman Powell. So he's kind of picked his lead candidate for new Fed chairman. And there's lots of things that we can talk about there, but it was a bit of a surprise. We actually had a couple things. So we had precious metals that went through a big sell-off. So as you recall, we had kind of gold and silver on a tear. And so, we've talked quite a bit about how, especially with gold, is that central banks have been buying a lot of gold, but kind of offset some weakness in the U.S. dollar. We have these expectations that U.S. interest rates are going to be lower this year. When we were talking about what Trump would want in a replacement for Chairman Powell, we're assuming he would pick somebody that would help him lower rates, because he's always talking about how rates are too high and got to get rates down. And so Kevin Warsh is known as a hawk when it comes to rates. And so we were kind of joking about this hawkish and dovish during our last podcast. And so we would think that somebody that is hawkish is really focused on fighting inflation. So, they would maybe higher interest rates, a tighter Fed balance sheet, whereas somebody that's dovish is maybe more focused on jobs and growing the economy, so probably lower interest rates. So it's got a couple people kind of scratching their heads in terms of this pick. Now, gold makes sense if you think the U.S. dollar is going to weaken, but if the Fed chairman is determined to be more hawkish and that ends up being the person, then rates probably aren't maybe going as low as the market was expecting. Or sorry, interest rates wouldn't be going as low as perhaps the market would be expecting. So you see, perhaps in the short term, a bit of a reversal of that trade. So this concern about U.S. dollar weakening or debasement of the U.S. dollar, perhaps that story is not quite as strong. Again, if rates are maybe not going quite as low as people expected, or at least maybe not as low as fast as people expected, then some of the leverage that's in the system, so the market kind of borrowing to buy assets, is that trade kind of fizzles a little bit. And then the other thing too is we had Microsoft come out. And so kind of just talking about the markets is that Microsoft came out with an earnings beat from an earnings perspective. So the revenue is higher and an earnings per share was higher, but their forward-looking guidance was weaker. And so you saw Microsoft drop, I believe it fell 10% late last week. And that's trickled into this week. I think it's still down about 12.5% from where it was trading previously. So, we've talked in the podcast before about why earnings are important and why we look at that guidance in terms of where we think the markets are going. So with the markets, it's been very interesting. As we kind of go into this week, we have more earnings coming out. Suncor, we're expecting Suncor to report today. In general, we're expecting those results to be good. And then we get some other Mag 7 stocks later this week. We get Alphabet, so Google tomorrow, and Amazon on Thursday.
Is it unnerving that someone's characteristics as a human being or their fiscal sort of responsibilities have that much impact on the economy when they're just, it's the difference between one or two people or whatever, a different man, a different woman, when it comes to appointment like that in the case of the U.S. and Has anything like that ever happened in Canada where somebody's personality so much affects everything?
Yeah, it's a really good question. You know, part of my experience is that, if we were to kind of analyze this decision rather than just kind of looking at it in a microscope over what's kind of happened in the last 5 to 6 days versus, how we're going to view this in 5 to 6 months, is that right now it's a story, it's a narrative, and the market loves to get excited about any kind of narrative and draw immediate conclusions in terms of what they think the new normal will be. As long as the U.S. dollar is the reserve currency of the world, whoever the Fed chairman is of the Federal Reserve is going to wield a lot of power and influence over the global markets. So significant. Now, there's a process here. Obviously, the president selecting the future chairman is called step one. And because this Kevin Warsh is currently not on the board of governors, so he's actually going to have to successfully kind of win two jobs. He's going to have to get elected to the board, and then he's going to have to be elected the chairperson. So he's going to have to testify, I believe, to the Senate. So there is a vetting process that goes through here. What's interesting is that he actually sat on the board before, between 2006 and 2011. He was an appointee of President Bush, and so he actually was on the Fed board during the Great Financial Crisis. So he does come to the board with some experience. I think that in itself, to answer your question, is this person having this much impact, is that these people still have to be qualified. They still have to go through a process, and so that in itself should go and say anybody that's getting this type of job should come with a lot of experience and is likely not going to be able to get the job unless, there's a lot of confidence that this is the right pick. But in Canada, because we're a much smaller economy, the governor position doesn't have as much impact with the global markets. But I do recall when our current governor was selected, he was primarily from, I believe his background was from the BDC or from kind of global economic development. He had a kind of a trade background. So not so much of a banker as compared to somebody who is maybe a globalist. And I do think that there were some concerns that perhaps his decision making would drift from the previous governor. But I do think it's a story. The markets like to kind of jump in and react. And it is true that small expected changes in interest rate and foreign exchange, they do have a real impact on the market. And when we were kind of talking about our outlook for 2026, we listed policy decisions as being perhaps a risk to the market. And we did talk about, interest rates, and that lower interest rates would be something that would be positive for the markets, but higher interest rates would be something that could perhaps derail the direction of the markets.
Well, and with the markets, it's all speculation and reaction anyway.
Yeah.
And we
Yeah.
we all know that. Anybody who's got
Yeah.
first grade in investment or wealth management knows all that stuff. When we were talking about the markets, you referenced precious metals, but what about cryptocurrency?
Mm.
And more specifically, Bitcoin. It's kind of fallen off a cliff a little bit here too recently.
Yeah, so I think what anybody who's been kind of following Bitcoin or anybody who owns it or trades it, whenever we go through either a significant rise in value or a significant fall in value, I think we have to say we're learning more about this asset. The recent sell off. So today it's trading around $74,000 US. So I think down 11% since our last podcast. It would certainly get caught up in this trade that, Bitcoin would perform better if there was this assumed weakness in the US dollar. One of the things that would prop up something like cryptocurrency, especially Bitcoin, the debasement trade would be an alternative to the US dollar, an alternative to gold. And so that same kind of momentum that derailed gold last week certainly would have knocked Bitcoin on its butt for that reason. Perhaps the outlook for interest rates not being as accommodating in the future, that too would be something that would take some leverage out of the system. People that are borrowing, maybe on their line of credit or borrowing on margin to invest in more cryptocurrency. Higher rates would effectively make that levered trade more expensive. Again, that would be, a similar reason for it to draw down. I think that's probably the primary reason, is that a lot of buyers of crypto are probably doing it with borrowed money. And all of a sudden, when this assumption that rates might not go down as quick, is that all of a sudden people are selling, and, to go and cover their loss, to kind of quantify their losses, not allow those losses to get any bigger.
Okay. And any parting thoughts on the Trump pick for replacing the Federal Reserve chairman?
As I kind of say, I think I'm kind of pleasantly surprised, because I think everybody was maybe looking for somebody that would just do the Trump's bidding. And at least coming into this position, there are now some question marks that there's somebody with experience, and somebody that favors perhaps kind of fighting inflation, which is another thing that was on our outlook, again for 2026, was, higher inflation could be something that, is certainly something that created the last negative calendar year for most investors. 2022 was higher inflation. So somebody that's coming in that is going to be very focused on not letting inflation get out of control, I would say that's a positive. Somebody that was there during the great financial crisis, kind of managing that event, I think that's quite positive. So somebody contrarian, but somebody with experience. I think both of those takeaways are positive. And so we'll have to kind of see how we kind of go through this vetting process and see whether or not in the end he ends up being the pick. So no other thoughts at this time, but we've got a process before we're there.
Okay. If you would like more information about wealth management or to start your investment journey, you can find Patrick's contact information at www.patrickmleonard.com. If you're watching this on YouTube, please subscribe and share. And there you go. That wraps up the Wealth Roundup for the week of February 6th with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. Have a great day.
Yeah, you too, Terry. Thanks a lot.
This has been the Wealth Roundup with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. I'm Terry Evans. The Wealth Roundup is part of the Reluctantly Podcast Network.